presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling and prowling with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Get this chart up in the den here very quickly. Wow, huh? Some interesting data coming out. For sure, contraction in GDP in Q1 25. It's pre-tariffs, huh? Your PC for this past month, right? Okay, you're basically flat. Could still be some kind of anticipation of an increase, at least in the price index with tariffs. So we're not out of the woods there yet. Year over year, your inflation is still high. You're going to get some kind of contraction, I would assume, again next quarter, unless this all kind of reverses. But I still think some damage has been done, definitely psychologically. I guess some of the words coming out now is that China has stated that the U.S. has reached out to do some tariff negotiations. I think this administration is in kind of a rock and a hard place. I believe their tariffs kind of, were part of their plan. Again, there's been a lot of different plans going on. Do we take revenue from the tariffs and use that to supplement, either pay for our debt here or remove income tax, or do we use the tariffs just as some kind of bargaining tool? And maybe, it's a mix of all of them, but I'm not sure anyone is totally clear on that in any major way. I was actually looking at some stuff. I want to go over some of the miners, especially the gold miners. Okay, Goro is moving pretty heavily. It is some decent volume. They had some pretty bad earnings. Like, bad meaning not sure they're going to be able to continue operating. Okay, so that's really tough. This is some phenomenal movement in the equity today, but yeah, I mean, the point range. We'll look at everything they have. I mean, we'll take a look at their reports, and I don't blame them. I think they're in a tough spot, but there are some other places that we can look. Of course, Harmony has been doing extremely well. I think VGZ will prove to do well as also. I mean, this is really mimicking a lot of what the gold contract has been doing in general. You've had this very nice push to the upside in Vista Gold. Again, these guys operate out of Australia, American company, I believe headquartered in Colorado. We've had Fred Ernest on a few times, actually, the CEO of Vista Gold. This has had some really phenomenal movement to the upside, and you're kind of just in this digestive period. Again, I am a little bit suspect of Goro into why it's rallying like this. So, you have this kind of near-term top here and another one here. Again, we'll go through everything. Let's take a look at just kind of our general list here. You're looking at the SPY off 0.77%, getting some kind of volume developing. You have the composite trading off 1.03% at 17,281. Dow Jones Industrial trading off 0.52% at 40,316. And those futures are also off 0.51% at 40,451. You have the Russell futures trading off 1.11%. Taking a look at the dollar, ticking up a little bit. Okay, you're up 0.26%, 99.45. Taking a look at Bitcoin, you're moving off just a tad, 1.38% at 94,655. Again, it's been really impressive to see this asset move. But it is now behaving, again, back in line. It's like we had kind of a momentary divergence in the price movement of Bitcoin. Again, this is basically positively correlated with the Qs, okay? We did see a little bit kind of different behavior, but we're right back there, at least as it stands now. crude, man, what a tank in crude, okay? It's like we're trying to test that bottom almost, okay? You're at 58.10 off 3.84%. What is the thought with this? Okay, so, you know, with the GDP numbers, with, and again, I understand PC is flat, but you still have, you know, somewhat persistent inflation, right? Year over year, okay? So more data is gonna need to come out with inflation numbers, you know, to really be able to say, okay, hey, listen, maybe we can start lowering rates right now. We can start doing some quantitative easing, get some money in a serious way into this market, and start ripping off. I don't know. I think it's very shaky, at least up until June in this market. Take a look at that. So you have, you know, fear of recession, okay, with GDP moving off 0.3%. Pretty intense, right? I believe that economic activity will continue to contract as well, which was a little bit part of our thesis of not really wanting to get into NUE, Nucor right now. That is what I'm definitely watching, and I would like to get into at some point. But seeing some stuff with Cleveland Cliffs and you know, some slowdown from Caterpillar and all those kind of things, you know, I would like to wait until I can be a little bit more confident that we are going to see a revival, or maybe we avert it. Maybe we're not negative next quarter, and everything gets resolved, and we're not in a recession, and yeah, we'll see. But as it stands now, you know, this is definitely movement in light sweet crude futures that are anticipating recession. Okay. Additionally, on top of that, you have Saudi Arabia saying, "Hey, listen, we can keep our oil prices lower for much longer." Again, we were talking about some issues that Kazakhstan, I believe it was having with OPEC in particular, OPEC, but in Saudi Arabia in particular. And this is the idea of increasing supply. You know, Saudi Arabia can absorb that. You know, who knows what they're doing? Maybe they're trying to gain more market share or whatever it might be. But you have kind of two depressive factors now. Additionally, any new leasing with, you know, things like fracking or extra drilling, of course, will suppress in some capacity light sweet crude oil futures. So we'll see for any kind of, you know, better development on this. Of course, when this rally down here, I thought this was very overextended. Wanted to get into Gush. Of course, that is Directions leveraged oil ETF here. Yeah, you're off 6.69%. But if you got a hunch on crude, definitely check out that leveraged ETF. Great way to do it, especially if you don't have your account able to trade futures. Okay, taking a look at gold contract off 0.54%. Again, we're just in this digestive phase. There's not a lot of flow coming out relative to what we've been seeing over the past month, okay? My only concern that exists with gold, right, is that if things do improve, right, I mean, and listen, you're seeing capital flight really out of the markets, right? Out of stocks. You're seeing a lot of money, even retail now, flow into money market funds. Tons of money, like $7 trillion in money market funds. Gold contract has seen a lot of that as well, and you're staying relatively stable. If things improve, do you see gold becoming a source of liquidity? This could be kind of difficult for the price of gold. Folks, stay right there. We'll be right back. We'll talk a little bit more about this when we return.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. I was just taking a look over the break. It seems, Trump was speaking, and he said, talking about the GDP numbers basically being the last administration's market and economy. And then he just said, I think about 25 minutes ago, that the next quarter also shows that prior administration. So that does kind of indicate that he might be seeing, again, another quarter of contraction, and that gets you recession, essentially, okay? And I mean, yeah, taking a look at gross domestic product for first quarter 2025, I mean, in Q4 of last year, up 2.4%, and now we've had 0.3% to the downside. So that's kind of tough, right? Changes in monthly consumer spending, taking a look at PCE. I mean, still, taking of what the heck is this? Yeah, with the Dallas Fed, I mean, you're looking at what in March, you had a trimmed mean of 2.5 year over year. So I mean, again, we're still above that 2%, right? And this is where it gets, freaky. Okay, maybe there is a massive contraction that we're going to see in this quarter because of everything going on, right? And maybe that really does get us quite low in inflation, and that can sustain. I think the Fed is very nervous about basically dumping a bunch of liquidity into the market, and this stuff rages right back. I mean, what is positive, and looking at CPI as well, your oil is very low, and that probably will persist. I think, again, this is a pretty strong sell-off, and I don't think we stick around this area, nor do we necessarily go any, much lower from here. But I don't think we get back up, to 70s or anything like that. I mean, the bears are in control of this market for sure. I think a lot of just kind of what you're seeing right now globally, again, with Saudi Arabia and OPEC, with what Trump is doing currently right now, with things like natural gas or whatever, I think we probably see this a little bit depressed for some period of time, right? Now, when this economy roars back, I mean, that's a great time to get kind of long on that, But this is definitely, a weak chart, and I think the fundamentals, or rather like kind of the macro conditions for energy are kind of going to suggest depressed prices as well. So yeah, I mean, we'll see what happens. Again, inflation is still here. We now have data of contraction in the quarter. I don't think this suggests that you get rate cuts anytime, within the next month or two. Again, June will be a very important month. Taking a look at the 10-year, okay, just on the day I can pull that up. You had an unbelievable spike right at the release of these letters, these figures. What, about 4.22% it went up to, and then we've kind of evened that out. Trading right now at 4.16 on the 10-year yield. This is kind of just in line. That massive dip we got earlier this morning down to 4.41, that's kind of gone back. This looks like we're probably going to chop around these kind of levels. And again, when you have you have some nice variables kind of canceling each other out here, right? On the one hand, you get a massive contraction, okay, of not a massive contraction, but you get a contraction of GDP and of the economy, right? And you do get some of this increase in inflation, although the numbers were not necessarily terrible today. They were decent, at least in the right direction, right? Then I could see for that reason, 10-year yields kind of staying essentially choppy sideways for the day. Of course, we will have, I think Teddy was on this morning, but Teddy Keksat, of course, in the Tiger Forex report, he will be releasing that on Monday, and definitely we'll discuss that a little bit further. Taking a look too, I mean, again, where's capital flowing? A lot of retail, a lot of institutional going into money market funds, right? SGov is pretty big. You're seeing the 3-year treasury. I mean, you're off about 5 basis points right now in the yield. I think that's where a lot of money is going to get parked. I think a lot of money is going to get parked in the gold contract as well. But when things improve, right, and this is looking at gold, I don't think gold goes back down to what it was trading at last year, but that would be, in a sense, a sell-off event for gold. A lot of this price for spot had really been driven by the Chinese as well, right? Now, of course, there's everything going on with uncertainty and a little bit of fear of sovereign risk in the U.S., and so that's a really good kind of reason to buy gold. But when the Chinese stop buying a ton of it, you're not going to get the massive pushes to the upside that you've been seeing in the gold contract. So, but let's kind of take a look here. You've had these prices decently elevated, right? And they're staying up here. So we take kind of a look. We'll look at some other mining companies here as well. Our UUUU is doing quite well today, holding, especially relative to other things like MP, USAR, CCJ, etc. But again, Goro, okay, this is a tough one for me. I don't think that they're going to be able to stay here. Let's see. Let's take a look. They have current assets. Let's just look at cash and cash equivalents of 1.6 million. They have mine gross loss of basically 20. Is that 20 million? Yeah. And I want to look at their operating, but they don't have a, there you go. And they use about 627,000 in operating activities. They're just like, it's hard for them to get profitable. They don't have a ton of cash. I'm not sure, let's see here. And they pay mining royalties that are kind of screwing them a little bit. I'm not seeing anything major as far as kind of loans go for them that they are required to pay. Yeah, the balance sheet is tough, especially when you're looking at assets to liabilities, and then we move into what they're spending, to be operational is insane, right? Look at the production cost. This is insane. Production, okay, so net sales, which you had last year, was 65 million. And production cost, 65.7 million. Production cost, 65.5 million. Yeah, I mean, how do you improve that, right? And that's very difficult for them. And this is actively worse than it was last year for them. And they still were at a loss last year, but now you've had an even greater one, which is pretty tough for them. Yeah, I think Goro is a little strange here. Yeah, they have a net loss, cash flow wise, of 56 million. Let me see what they were. Yeah, I think they're in kind of a rough spot, honestly. So we'll see. They're running very short on cash. I mean, they even said, listen, things are going to be kind of tough liquidity-wise for us. So if you're in Goro right now, maybe consider taking some off the table. Of course, things can keep running for no reason, right? You do have some kind of resistance here, right? At least we could just take the wick at 73. Okay, you have another one here. This is where you really went lower, right? You made lower highs, then we made far lower lows. And it looks like we're gonna test that now. You can kind of close above that level on some decent volume. Hey, maybe you're cooking, right? If not, then I still think gold probably has lower to go because I don't think they're really situated. And the best argument for gold right now is gonna be their free cash flow, essentially. Folks, stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, everybody. Taking a look at VGZ. You're off 3.05%. Again, pretty good chart action here. Taking a look on, contrary to what Goro looks like, VGZ looks pretty decent. Cash and cash equivalents boomed about $10 million this year. And again, this company is really in the process. They were exploration, okay. Now they're getting to kind of production, right? And they have, Mount Todd is shaping up to be a very good project for sure. Take a look at your cash equivalents of about 16.9 million. You have total current assets about 17.5 million there. Liabilities about $1 million. Okay, so that's a pretty good solid balance on there. Trying to take a look here. Total operating income, you're looking at 10,535. A net income here of 11 million. And again, this is like this massive switch, right, from this exploration into actively mining. Taking a look at 11.2 million on net income versus a net loss of 6.5. Okay. Their cash flows were a little bit funky because the operating activities switched. The gain on the grant of royalty interest in mineral titles. So, that was a loss there of 16 million, but that got flown into financing activities. So proceeds from the grant of royalty interest in mineral titles. So you can see that kind of gone in the next balance sheet. But this is not horrible for Vista Gold. And you're looking at a market cap of 121. So yeah, really, to net income, this is not a horrible multiplier, especially when we're starting to consider how much gold has just skyrocketed in this past quarter. So that's one I want to be following a lot. Of course, Harmony is always just very solid. The GDX trading up 0.53%. Taking a look at UUUU, you're moving up today. Yeah, this is just some kind of general flow kind of testing here. We're going to get some earnings coming out from them, right? So let's take a look. I believe this is going to be May 8th, so we're definitely be following that. Before preceding those earnings, we'll do a deeper dive like we did into energy fuels, kind of taking a look at what their main moneymaker is. Of course, that is uranium, how they can kind of get more exposure to the rare earth elements and capitalize that in the U.S. Obviously doing better than some of your other guys as well, whether that is uranium, both looking at CCJ and UEC, and then of course your rare earth element miners of MP and USAR. Okay, USAR is a strange one to me. Yep. Remember we were talking about this, right? Because they had $2,000 in cash. Again, I thought I read that wrong, the first time, but no, they have $2,000 in cash. So I was like, listen, they're going to finance, they're going to dilute, or they're going to, get some debt here. So looks like they're going to cover about 8.6 million common shares. When was that released? Today? And that's to be expected. And this is the thing, I know some of the guys in the den play these kind of, very small cap stocks. This was a penny stock, at least down here, but point being is some of these really very small are micro caps and everything. They're going to do something to screw you in the meantime, in the short term. And it's not like they're doing it intentionally, but these guys need money, right? You're buying stuff that has zero cash flow from operations. They're just losing money. They're building up, right? You're looking at these really nascent growth companies. They are going to do things that are going to dilute you. Usually it's going to be that, especially when the stock skyrockets, So, or they're just going to take on more debt. So you always got to be careful with that. When you see these massive rip-ups, important not to FOMO out on them, because you don't know what they're going to do. Same thing happened with CTM, right? When we saw CTM rally up to $2 or something around there, yeah, 283, and then they start diluting. Of course they do, right? Why would you not? No, they get some coverage now. How about that? Yeah, still holding very well. Again, that's some decent price action for CTM. Big consolidation. Going to be looking forward to some further kind of updates for them as well. Taking a look at some of the other guys, you have CCJ coming out with earnings, I believe tomorrow, right? Wow, how about that? That is going to be tomorrow. I have anticipation that these guys will probably do quite well. Again, very bullish long-term on uranium, and they have done pretty well. This has been a very resilient stock, you know. Taking a look at Oklo, that's off 4.89%. Your nano-nuclear off about 2.88%. Nextera off about 1.86%. And then, of course, your Nucor off about 0.57%. Let's take a look quickly. Some of your big tech, of course, you have Meta and Microsoft reporting earnings. You know, Meta's interesting, okay? I mean, we can talk about it a little bit in the sense that, you know, obviously their dominant form of making money is through advertisements, right? And it didn't seem like anything affected Google in an insane way, right? Ad revenue was still very good for Google. Meta is going through the same kind of issue that Google is, with people accusing them, you know, in court that they're a monopoly. So that's kind of an issue. But you're taking a look at the price movement with Google here, and you get, again, you know, this is, you know, you get good earnings, some nice little gap up to the top there, and we're really right back to pre-earnings, you know, and that's kind of what I'm anticipating with Meta as well. If you get into recessionary environments and people, you know, aren't spending money, I mean, you look at PCE, like, where are people spending money? And it's on, like, vehicles, and that's in anticipation of the tariffs, you know? You can get some kind of contraction in sales for sure. I mean, that's what we were kind of seeing with Snap, a contraction, unable to provide forward guidance on, you know, advertisers. That's off 13.26%. This is always a heck of a ride for sure. But, you know, obviously Meta's a little bit more insulated, right? I mean, they have, you know, billions of people on that app, or at least using some of their services. And there's always gonna be some stuff there. But, you know, can they provide, like, very strong forward guidance? I mean, I don't see why advertisers increase spending during this kind of time, especially if we're going into something that's a little bit recessionary. Take a look at Microsoft as well. That has earnings after the bell too. So it's gonna be a very fun day seeing what happens with that. And these guys will be kind of tastemakers for the market. You know, if Meta's like, hey, we're doing fantastic, we're gonna continue to do fantastic, and all these other areas of interest that we invest in are going to continue to be fantastic, well, get some good moves to the upside. Folks, stay right there, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting, designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, watch the Tom O'Brien Show. This is our last full segment here. See what Meta and Microsoft report. But, Google ad revs were fine. So, kind of extrapolate that to Meta. Take a look at Super Micro. How about that? Off 13.46%. They really missed their forward guidance. They just reported on their Q3 25. So let's take a look at this here. This is their Q2, at least on February 11th. So they had net sales in the range of 5.6 billion to 5.7. You had GAAP net income per customer. Per common share of 50 cents to 52. They were anticipating sales in the range of 5 billion to 6 billion in the third quarter, which they just reported on, of fiscal year 2025. And then net income per diluted share of 36 cents to 53 cents, quite a gap there. So what did they report? Well, not that. They had revenue 4.5 to 4.6 billion, which is just horrendous. Okay, again, taking a look, they're talking. Yeah, here for this forward guidance, they're looking 5 to 6 for this quarter, and they reported 4.5. So that's really rough for them. Their GAAP earnings per share was 16 cents. And their non-GAAP was 29, right? So, this is a huge miss for these guys. What they said the issue is that it basically delayed decisions from customers, right? And they're saying they, kind of anticipate that improving for their Q4, but you can't say that for sure, obviously, right? But that in and of itself, I think, shows that this kind of this stuff that's going on with the tariffs and the uncertainty of the market is affecting people. Because what Super Micro is offering, again, this isn't just some random consumer product. These are the cooling technologies that are used in major data centers. Right, which is what this whole rally for the past few years, again, has been predicated on. Okay, take a look at Dell, too, on this kind of news. Boom, off 2.74% for the same kind of reason. And then Hewlett-Packard is also off on that. But these guys aren't. What the heck is that? HPE. Yeah, off 0.77%. But they're not really major players in this, unfortunately. PE of 7.7. Take a look at Hewlett-Packard. They haven't been able to really compete in the same way. But so yeah, what is that telling us? It's telling us that people are uncertain and not spending money on these things that are extremely important, right? Now, it seems that the big hyperscalers are going to continue to spend money. Talking Google, Amazon, all of that, Meta are going to continue with that CapEx, but this isn't like phenomenal news. Additionally, it seems like people are kind of waiting for newer tech to come out. This is a little bit of what they were saying, SMCI. Yeah, so it said during Q3, some delayed customer platform decisions moved sales to Q4, okay. They also saw higher inventory reserves resulting from older generation products. Now that's going to be something that's just a problem for Supermicro, right? Yeah. They said we have confidence that our calendar year 2025 growth could be a repeat of 2023, which was very good for them, if not better, assuming the supply chain can keep pace with demand. Yeah, you know, I don't always believe what this CEO says anyways, because of how sketchy this company has been in the past. But not fantastic a little bit for that industry, but definitely in particular for Supermicro. You know, I mean, you're trading back down very close, right, to your lows in February. There just has not been a lot of movement in this. What are you trading at? You're trading at 18.6 billion right there. Again, this was a snapshot, kind of like a. They haven't actually released the report yet, so we're looking forward to kind of seeing how that develops for them for sure. All right, let's take a look. You know, we'll talk a little bit about some more kind of what we can anticipate, right, with this slowing economy. And again, this stuff is super interesting, right? Like looking at satellite data to see what's going on. Okay, so here, I'll pull this over. And you can just see real time how this thing is kind of slowing a little bit, right? So you're taking a look, okay, we're gonna really push this CPU to the max, guys. I mean, you have a bunch, I mean, not a lot of traffic around San Francisco. Anything that is there is completely anchored right now, right? Same kind of deal, you know, coming into Washington, into Portland, all that, not necessarily occurring, and you can see them all kind of, you know, marooning out in this strait here, right? So that's kind of a problem. And then you're seeing the same deal in China. And this is just kind of like a halting of everything going on. Where are we looking at? This is Hong Kong. I mean, look at all just these guys are supposed to be shipping, you know, and you're gonna get this kind of freeze. Now, hopefully, if it is the case that Trump is talking to China, I'm really hoping they're going to take a deal or make some kind of deal and get some of this stuff moving. You know, unfortunately, what I think this kind of shows is that now America might have to make some kind of concessions on China. I also get concerned that China didn't like this in any major way and, you know, now positions themselves to, you know, not have this happen to them again. Right, so we'll kind of see what develops out of that. What Lutnick was saying wasn't necessarily, you know, horrible in any way. One of the things that I thought was kind of weird was him talking about, and again, this stuff's not clear, right? We were looking at, you know, potential investing in companies that are doing robotics for factories, because it seemed like that was really going to be what they were trying to get with bringing manufacturing back to the U.S. Then Lutnick says, hey, you know, this is a factory that you're going to be able to work at for your whole life. That your kids are going to be able to work at, and that your great-grandkids are going to be able to work at. And, you know, to be frank, nobody wants that for themselves. You know, there was an awesome poll that was taken, and it was, you know, how many Americans want the manufacturing to come back and want manufacturing jobs for American citizens, and it was a very good amount, like it was over a majority, right? But then when they asked, would you work in the factory, you know, I mean, you had like 10% of people say yes. You know, so I mean, there's a big issue there, and I don't know what this turns out, like how this shakes out really, and I don't think anyone does. And I think what, you know, we stick to with that is that uncertainty kind of prevails. You know, again, there are some things that I'm really interested in. I'm interested in Nucor. I am interested in Kamiko. Of course, we're in UUU, but I can't safely say, like, yes, this is the time to do it, because I could still see some kind of, you know, a pullback with where we're at. Now, anything that gets close to the major pullback we saw in the beginning of this month, you know, that would be something where I start getting a little bit, you know, gets a little attractive, essentially. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. It's kind of where we're at. You know, not a ton has necessarily changed. Some of the stuff we were anticipating just is basically what's happening on the larger scale, right? A contraction in GDP. Been talking about the threat of that for a while. That will probably be the case next quarter, unless some things drastically change. Inflation is improving a little bit. We're still elevated. You know, I don't think that gets us rate cuts. And you know, I mean, tech earnings haven't been terrible. Some of these earnings really haven't been bad at all, right? Like Sophie did okay, but you're just not getting the energy. At least you didn't the next day. Yeah, I mean that's really tough. You know, I mean that was even horrible on earnings. I'm not in SoFi, and I don't really like these new banking kind of apps just to invest in because there's a lot going on with them. Hood, yeah, trading off 2.57%. They have earnings today. Ooh. So that'd be kind of interesting. Kind of some neat stuff going on with Hood is they're starting to expand into trusts, which I think is very nice, like estate planning. You know, people growing up on the app, they're getting a little bit older, right? Maybe they have kids now. Maybe they need to start thinking about that kind of stuff. They also have a new premium kind of membership you can be in if you use their banking app. So I think that's very interesting. So we'll kind of see what happens. Taking a look at HIMS, because that's another H ticker. That's off 5.86%. But you had quite a nice movement to the upside of HIMS, and that is on the news that Novo Nordisk is going to be partnering with them to sell, I believe, Wegovy for a little bit cheaper. This, again, was a big issue that Hims was going to run into, is they could no longer compound, I believe it's semaglutide, which is Novo Nordisk's. We'll see what happens with that, right? I mean, that was a large portion of their revenue, you know, and they are expanding out into things, you know, like proteins and everything that you can kind of inject or consume, but I'm not sure they'll be able to kind of close that gap. And there's new GLP-1 drugs that are coming out that are gonna beat tirzepatide and semaglutide. Folks, thank you so much for joining me. We'll see you tomorrow, 9 a.m. with Tommy O'Brien. Take care.